Inventory is coming. And as I say that, I can just picture the Game of Thrones meme here, but it's actually true. Now, I know inventory has been a very hot topic over the last couple of years in the real estate market, especially when we talk about this lack of inventory, but we just received the January numbers and the inventory levels are actually very positive. So before we jump into the statistics, if you like this kind of content, please feel free to like the video and subscribe to our channel. And now let's get into the numbers. So what we're looking at here is the January 2023 numbers compared to December of 2022, so month over month. And we're going to be looking at both the city of Burlington as well as Hamilton. So taking a look at Burlington first, we can see sales jumped just a little bit, about 5% from December to January. In Hamilton, we saw more of an aggressive increase at 22% from December to January. And our board also includes the Niagara region. The average was a roughly 14%. So right in the middle of where these two are. And what this tells us is that demand is starting to pick up a little bit. We just had the recent rate hike from the Bank of Canada, but they also announced that they might be holding rates if inflation continues to come down. We've also just heard that fixed rates are starting to come down. So I think buyer confidence and consumer confidence is starting to pick up. And naturally, as we move into the spring, these sales numbers will likely continue to increase. The next thing we're looking at is new listings, and this is the inventory that I was talking about at the start of this video. So in Burlington, our inventory jumped 104% from December to January, which is basically doubling the number of homes that are hitting the market. And in Hamilton, we saw very similar numbers at roughly 90%. So this is really good news when we talk about a lack of inventory that we've been experiencing in the market, because just from December to January, we've seen the new listings that are hitting the market double. Now, this also points to the fact that consumer confidence is picking up because sellers are confident that their homes are going to sell and ultimately they're going to have to buy, which turns into demand or sales in the market. So next is the months of supply or months of inventory. And this is a calculation using the sales and new listings. And it basically tells us, are we in a buyer's market, a balanced market, or a seller's market? So anything between 3 and 6 months is typically said to be a balanced market. We're hovering right around 2.5 to 3 months of inventory in both of these cities. So in Burlington, this number didn't really change much, right around that 2.5 months of inventory. In Hamilton, it actually came down 20%. This is because we saw more sales happen than the previous months and not as big a jump in the new listings compared to Burlington, but still kind of sitting on the cusp of a balanced market, which will allow for more healthy price growth in the market. And now coming to price, because that's what everybody wants to see here. We're looking at benchmark price as well as average price. Just going to point out the elephant in the room, which is this negative 11% for average price. So what average price is, it is all of the sales that happen, so the total sales volume in 1 month divided by the number of sales. So if you have 99 detached homes that sell and 1 condo, it doesn't care. 100 sales divides that. So this average price can be skewed pretty easily depending on the property types that are actually selling. And that's what happened here. You can see in Burlington, average price was down 11%. In Hamilton, it says it was up 1%. That's because when you look at the different property types, so detached homes, townhomes, and apartments, we saw a lot more condo sales in Burlington in the month of January than we did townhomes and detached compared to the month before. So what the benchmark price does is it takes this into consideration. It takes out the extremities to begin with, the super highs, the super lows, and then it also looks at weighted averages based on what property types are selling. So this is a number that we look to more when we're looking at forecasting or where the market is actually moving. And interestingly enough, this number was both at 1% for Burlington and 1% for Hamilton. And I wouldn't call this prices going up 1%. I would call this stabilization. And that's what we're starting to see. And I think this is what we're going to see as we move into the coming months. Like I mentioned earlier in this video, fixed interest rates are actually starting to come down. Inflation rates are coming down, which suggests that the Bank of Canada is going to start to hold their variable rates or maybe just increase them a couple more times. And as these things happen and consumer confidence starts to build up, I think we are going to see prices stabilize for the next couple of months, but it will obviously depend on what happens in the economy as well as the real estate market. So the big takeaway from these January numbers is that we're seeing large growth in our inventory levels and our new listings hitting the market. And what this is going to do is it's going to give buyers more options when they're looking to purchase, which is ultimately going to create more of a balanced and healthy market. And I think it's good news to see this is happening. That's it for this video. If you have any questions or you want to see more information like this, let us know down below and we'll talk to you soon. See ya.